Hi everyone, this is Bag of Dawn at StockMarketCaddy.com. It is December 18th at about 7:30 or so. I just wanted to address, I hear from a lot of people and I also see advertised online and on the radio. I hear financial brokers and planners just saying, if prices over the 50-day average, go long. If prices under the 50-day, go short, or at least just don't be in it. It's just that simple. Or they might get into the 50-day crossing the 200. And so let's examine whether or not, before you waste any of your time or money, as to whether or not that strategy will work. Let's look at the SPY on a daily going back 30 years. 30 years. We're going to format this strategy. This particular strategy is a moving average cross long entry when price crosses the 50 and stays over the 50 for at least one day. We're going to turn that on. And also when it goes underneath the 50 for one day, it would go short. Properties for all, $7 a trade. We're trading a block of $10,000, rounding down to 1, the smallest amount of shares. Let's just take a look at this. And well, here are all your trades on the 50-day moving average. On a back test, let's look at the performance review. You would have lost $10,549. You would have traded about 465 times. Only 23% would have been profitable. Your performance graph would have looked something like that. Not so good. Okay, well, maybe it's the 50. We can't even go any further with our testing. Maybe it's the 50 crosses over the 200. Let's take a look at that. Okay, now what we've done, same chart. We got a moving average line cross long entry. 50 crosses the 200, it goes long. 50 crosses the 200 underneath, it goes short. Going back 30 years, we need approximately 300 days of backtest information to backtest this. Let's close this, and here are the trades. Let's look over the last approximately 29 some odd years how this would have performed. Here's not a bad equity curve over the last, well, this is actually, there were only 21 trades, but let's examine this a little bit closer. First, $10,000 over 29 years would have realized you $23,763. I'll let you do the percentages from there. Profit factor of 4.25. You would have had a total of 21 trades. 52% would have been profitable. 80% profitable on the long side. Only 27% profitable. And here's the rest of your data. Maximum drawdown intraday, peak to valley, almost $5,400. Maximum trade drawdown of almost $1,500. We look further at a trade analysis. Average time in trades is 300, almost a year. This is you're not trading this a lot, and you're in the market. I want the average time in trade. You're almost in the trade just about all the time. Now, let's come back to the performance graph. This is with the back tested data. Let's take a look at out of sample. This is an attempt to randomize this. You can see out of sample representing from 93 to 16 would have produced about $2,000. It's not over this from 93 to 17. This is an out of sample look. Let's go back, which isn't very good. It's a way of randomizing this. So, does it work? Well, let's do it. I want to randomize this even further. See if we have what we call a curve fit, in that looking back it looks good, but does it work in the future? Will it work? The way we're going to do this is we're going to optimize 25 to 75, increment of 1. We're going to let the machine tell us what was the best average. 100 to 300, increment of 1. We're going to do the same thing on the short side of the market. 25 to 75, increment of 1. And we're going to do increment of 1 on the short side. Need to make sure that I have enough back data. I do. Haven't changed anything else. I have a file created, SPY Walk Forward Optimization Daily. This will be 50. Well, we were optimizing, so it may be a little bit something different than 50. Maybe there's a little something better. Let's let the machine tell us. I'm going to copy this file because I want to save it, and I want to put it through a Walk Forward Optimizer to see if this strategy has any validity whatsoever. We're going to optimize, overriding what was there earlier, and we'll be right back. Okay, it has now optimized for us. What are those values? The machine is telling us, in its view, the optimum is not 50 but 41 to go long, and the 220 moving average. Okay. In shorting, it says 51 is better and 300 of the moving average down, and they'll play off of each other. We close this. Now let's look at the results on the back test. Strategy performance has actually improved, up over $30,000. Let's look at the performance summary. Here it is, a profit factor of 7.02. Over 29 some odd years, $10,000 would have tripled. Beautiful. Send me all your money and this is what we're going to trade. I'm joking. I'm joking. I'm not a broker. I'm not a financial planner. I don't want your money. That was a joke. But that's what you'd probably be asked to do if someone was. Here is the maximum drawdown. So on the surface of it, it looks pretty good. Let's look at the out of sample. Okay, not that great. We also look at something called the optimization report. Is this suitable for a walk forward optimization? It's very low. The robustness on the suitability report is 22. Very, very low. What is the walk forward optimizer? Let me show you. We come here. I come here to open. And I come and I want the file that we just created, SPY WFO Daily. I'm going to open this and I'm going to run a walk forward optimizer. It is a way of randomizing that that back test, so you don't have to spend the next 29 years finding out that the broker that you spoke to didn't have a clue, and you would have wound up with whatever. Let's see what this would tell us. It is this technology that the folks in the Manhattan Project for the atomic bomb, this is some of the elements of what they used to find out whether or not they were going to blow up the world when they set off that first bomb. Why not use something like this to find out whether or not you run the risk of blowing up your account or wasting your time and money? Okay, everybody, this is the walk forward test on the criteria in which we measure our strategies that failed on all 6 criteria. But let's take a closer look. On the annualized matrix, what this does is run thousands of tests out of sample. We call out of sample to find out on an annualized basis, walking forward, what is the likelihood that such a system will make you money. The matrix says on average it would make you $49.55 over 29 some odd years. Efficiency of the back test, what is the efficiency of backtest results less than 10%. That's god awful. Consistency, the profitability of these runs, 26%. Awful. Folks, I wish it was that simple. The 50 over the 200 moving average is a farce, as is any other moving average quote unquote system. I'm Bag of Don at StockMarketCaddy.com. Feel free to give us a call. Feel free to send us an email if you've got another strategy that is being sold to you before you commit your time, money, and effort